Okay, guys, welcome back to Mondays with Mo again. This is the third session on the Principle of Bookkeeping Controls unit. And this unit, as I mentioned before as well, it's the most sought after, or put it this way, the hardest unit when it comes to the level two qualifications. The national average for passing this unit is about 60 to 70%. So you have to look at it in a way, this is where you may get a little bit of an obstacle or a speed bump when you're cruising through your level two qualification. You may have passed your bookkeeping transaction, which is the introduction to bookkeeping unit with flying colors, and along come this second unit, and straight away you feel like, oh God, what I've just signed up to myself. So this one is one of those units. You have to go back to basics, and you have to gather all the knowledge you get gained from your first module, and then apply that sincerely and learn the fundamentals properly, and then you'll be able to achieve what you set out for, getting a really good marks from here. So in this exam, normally you will get about 8 to 9 questions. Let me check. I think it's you get 8 marks, 8 questions, I think. Let me just quickly check. I have the questions here. Yeah, 8 tasks there, and the marks are um, graded out of 80. So when you get 80 marks, you need to get 56 marks to pass this exam. Let me just quickly check the calculator. Let's see here. So 70 times 1.25. No, hold on. 70 divided by 100. Yeah, 56 marks. Yeah, you have to get 56 marks out of 80 to deemed as competent on this unit. And it is very easy if you look at it in a way. Some of the questions later in the exam are a lot easier than the questions in the middle. The students normally used to struggle in certain questions when it comes to the control accounts, journals, corrections of error, and sometimes in the bank reconciliation, they tend to show a little bit of a struggling there. But as far as I know, if you put your effort in some questions where you think you're going to get best marks, do those questions first, and then move on to the newer questions or the harder questions, and then you'll be able to sustain a really good pass rate here. So this session is purely on exam style questions. I prepped myself a spreadsheet with several questions there. I might not be able to go all through all of them, but we'll try our best to fit that within that 1 hour time period we have. Also, you have to remember, guys, when it comes to these questions, these are from my publishers, which I use for my college work. One of them is going to be Osborne's and Kaplan. And you also know, you probably use them in your classroom as well for your own learning purposes. They're really good publishers. Of course, sometimes you may find some, what do you call, discrepancies between their resources here and there. But overall, they are very reputable. And then I use them for my classroom. So it is kind of a very dependable resources for me to be using in this session. So props to them, Kaplan and the Osborne books. So at the moment here, first question we have, this is about the control accounts. I purposely didn't teach the control account during the Mondays with more sessions earlier because it's kind of be kind of a boring when I'm going to talk about that a lot, and then I'll run out of questions when it comes to this exam style question session. So therefore, I left those questions purposely so we can attempt them on today's session. So let's look at the first question here. This task about reconciling control accounts. This task contains part A to C. Identify whether the following statements are true. First statement, in this scenario, you have to have thinking about true or false. Keep an eye out for keywords. I have said that several times. When you're going to look at that particular scenario, you look for keywords. And those times, those keywords can render a statement absolutely fine or completely wrong. So we just have to be keeping an eye out for. Reconciling the payable ledger control account to the payable ledger will only identify errors in the payable ledger control account. Straight away, I can say the word only means we are restricting ourselves just for the control account. No, you may also find the errors on the payable ledger itself. Okay, so therefore, the statement is not correct. And then also the next scenario, the missing transaction on the payable ledger will not impact the trial balance, which is absolutely fine there. Why? Payable ledger is a subsidiary ledger. It does not impact the balance on the general ledger. Only the general ledger entries will go into the trial balance. Therefore, anything on the subsidiary ledger, like payable or receivable ledger, will not impact. That statement is absolutely fine. The next one, in this scenario, they are giving you several accounts here. He works in an accounts department for clothes manufacturer, T-Shirts PLC. The following supplier accounts make up the payable ledger at the 1st of May. So if you look at that here, there are four suppliers. On those four suppliers, three of them has credit balance, and the last one, Fashion Finds, has a debit balance there. So meaning of it, we have probably overpaid them, or we what do you call, secured a credit note from them after we made the settlement pay to finish their balances. So therefore, this account, we need to remember, we need to deduct from the total balances when we calculating these other three accounts there. So they're asking you, what is the balance on the payable ledger control account? So the payable ledger. So what is the payable ledger balance? So let's go to the calculator again. So bring my calculator up. That. So on the calculator, let's see what other numbers we have. Plus 46,800 plus 13,125 minus 420, which should give me 158,205. So here, 158,205. And then they're saying here, the balance on the payable ledger account on the 1st of May is a credit balance of 162,300. They're asking you what the balance on the payable ledger control account is higher or lower. So you know this is the payable ledger, and the payable ledger control account, PLCA, has 162,300. So the difference between them is going to be, this one is £4,095 higher. So we need to make sure we say payable ledger control account is £4,095 higher. In the exam, you have to choose one of those options, and the other one will get blacked out. You can just mark it, highlight it, or you probably can remove it. You can just have to do a drag and drop there. You don't have to type anything in there when it comes to higher or lower, but the number, you have to type it in. Now, the next question. This is the one I want to spend a little bit of time explaining to you. So here, the payable, receivable ledger control account shows a balance of £131,679, and the individual balance shows £128,073. They're saying here, identify whether each of the following may explain the difference between the two balances. So there are certain entries here in this scenario without any numbers on them. And they sometimes can give you some sort of a headache when it comes to it. In this scenario, this is worth 5 marks because there are 5 expected outcomes. They can be true, and on the other time, it does not explain the difference. So what we do, we need to make an assumption. I will normally do something like this. I will draw up two T accounts next to each other for the receivable ledger control account and the receivable ledger. So let's say here, I'm going to do here quickly. Control C, Control V. So I'm going to say here, this one is merge and center. This one, merge and center. I'm going to say RLCA. And then this is the receivable ledger. And I'm going to say this is higher and this is lower. Why? Because this number is the biggest number. When you come to look at here, the payable ledger control account, receivable ledger control account has a higher number, receivable ledger has a lower number. And I'm going to use something called a £100 method. So let's start both of the accounts with £100 balance both down. They start with £100 balance. And they're saying here, a sales invoice has been recorded twice in the receivable ledger. So what happens if you have a sales invoice? It will increase the balance. So here, this is how this should be recorded in the receivable ledger control account and the receivable ledger. Both of them should have had entries. But in this scenario, sales invoice was recorded twice in the receivable ledger. So this receivable ledger here, it has been entered twice. So what is the balance I'm getting here now? I'm going to say here, this is one going to be 110. This is 120. But can you see, according to my initial calculations, this one's supposed to be higher and this one's supposed to be lower. Can you see here? It does not match that narrative. So therefore, what I'm going to do, I'm going to quickly draw this here as does not explain the difference. So let's go back in there again, original numbers. I'm going back here, deleting these numbers, then come back to the next statement. A credit customer in the receivable ledger has been omitted from the customer listing. So if I'm going to look at it here, when I'm going to take the balance, the both of them has £100. So if I have calculated the RLCA correctly, there's no problem. But when I'm going to do the receivable ledger, I totally omitted that number on the customer listing. So therefore, the receivable ledger had no balance because that number didn't go towards the receivable ledger. So therefore, this explains the discrepancy. So that statement, it is true. So that's going to be now, let's go back here, draw that one as true. Okay. Now let's look at the next one. Let's put that £100 back again. Now, next one saying here, sales invoice has been recorded twice in this receivable ledger control account. So this statement and this statement are stark opposite. Basically, if that is £10 and £10 here for the new invoice, they're saying here, in this scenario, receivable ledger control account has an entry there, not the receivable ledger. It's been entered twice in the control account. Even though that is incorrect, what is that going to result in? The new balance of £110 and sorry, £120 on the RLCA and £110 in the receivable ledger, which is the exactly same scenario as the number we have found. This is higher and this is lower. So that may explain the difference. So let's go back and check the fourth and the fifth one quickly. Let's go back in there. And the fourth one says here, a sales return to a credit customer was recorded twice in the individual customer account in the receivable ledger. So here, I normally put the sales return on the opposite side, on the credit side. Why? It reduces the balance of that account. Now, what happened in this scenario? The return is being entered twice in the receivable ledger. So here it's been entered twice. So what is the balance of this account? £90, and this one is going to be £80. Is that matching my narrative now? Yes, absolutely, because here this has got the higher number and this one's got the lower number. So this statement again, it is explaining the difference. And then look at the last one now. And the last one they're saying here, I'm going to erase these two. It's just the opposite because the sales return and the discount allowed has the same effect. It says there, discount allowed to the customer has been recorded twice in the receivable ledger control account. So a discount will be going on the credit side of those two accounts. But in this scenario, I have put the discount allowed twice on the control account. So what is that going to do to my balance here? £80 here and £90. But this is supposed to be higher, this is supposed to be lower. It is not matching that narrative. Therefore, this statement is incorrect. So here, it does not explain. The difference would be the first and the last one. The other three could be the ones explaining why those balances are showing higher on the receivable ledger control account and lower on the receivable ledger. Don't worry, guys. If the actual number size just for the illustrations, the real number will be somewhere along the thousands. When you see that numbers here now, it is about £3,000, £3,500, £3,600 different there. So therefore, there are the three explanations. Now let's look at the next question. This is also similar questions, but these were drawn from the Osborne books. They're asking you here, let's talk about reconciling control accounts. Identify which one of the following would cause a difference between payable ledger control account and the payable ledger. So they're saying here, what could cause a difference between the main account in the general ledger and the subsidiary account in the payable ledger. So let's see here. A supplier missed the payment run for June. Now, if they missed the payment run for June, what are we going to worry about us? Because they're not going to pay us. We pay them. So therefore, it won't make any difference. The total column of the purchases day book is undercast. If you remember, the day book has three different columns. What are the three different columns we have on the day book? We have the, let me just put it here. We have total, VAT, and net. So what happens to the total column? This will go into my PLCA. This one will go into my VAT, and this one will go into my purchases. So this one, it's undercast. What will happen to my payable ledger control account? The ledger control account will show a lower balance. So that could be a reason. So let's put a star there. We might get a better answers, but we don't know. But we'll come back to that later. Okay, so I'm just going to put some star there just to make sure. We'll come back to that later. The net column of the purchase day book is undercast. It won't matter for us because that goes into the purchases account. It will not impact the ledger control account or the ledger. An irrecoverable debt recorded for F Painton ledger account instead of T Payton's ledger account. Again, guys, irrecoverable debt recorded will not be for the suppliers. They're only for the customers. So when we're talking about suppliers here, when it comes to the payable ledger control, they cannot be recoverable debt. So there is a nice strive by them just to divert your attention away. But if you know what you're talking about, this one is supposed to be going into my receivable ledger, not payable ledger. So therefore, this will not impact. So this scenario, the right answer is the second one. And then they also given you this particular scenario. You have been asked to reconcile the payable ledger control account to the supplier report extracted from the account. They're saying in this scenario, what is the balance of the payable ledger? So the payable ledger, we're going to find there are certain credit entries here, 1, 2, and 3, but there is a 1 debit entry here. So therefore, what we need to do, add all your credit entries together. So let's get my trusty calculator out again from the computer. 3,105 plus 2,959 plus 5,978. These are all the credit balances minus the 300 pounds debit balance for the Lewis and Co. and which will give me an amount of 11,742. That will be the answer. So they're saying on the next scenario, the balance of the payable ledger control accounts is 12,342 pounds. And what is the difference between them? So we're going to say 12,342 minus that number there, which will give me 600 pounds difference. So there could be some sort of an error there. But again, the next one we're getting there, it is similar to those questions, but have no connection to that particular scenario here. Okay, so let's say here we'll go back in there and check the same question. So here I'm going to copy this. In this question, I'll have them ready. So we'll be able to go through our scenarios again. But this time I may not be able to use the 100 pound method. It's just an example of it. I may use a slightly bigger number. Okay, so the first statement. An invoice for 300 pounds was posted to the wrong side of the individual supplier account on the payable ledger. So therefore here, I'll get rid of that. So this scenario, this is going to be PLCA. Hold on. I will do PLCA separately because there are questions about PLCA and RLCA there. So I don't have to keep on changing everything. So I write this down as here, invoice for 300 pounds was posted to the wrong side of the individual supplier account in the payable ledger. This will result in difference of 600 pounds between the payable ledger and the payable control account. So let's say here, I have a balance of, say, 1,000 pounds. Okay. So what happens now if I have a balance of 1,000 pounds on both sides? I have 300 pounds invoice and we posted on the wrong side of the supplier account on the payable ledger. So here we've done here, this is how we should do it. But what we done, instead of doing that number, we have put that down on the debit side. This resulted in 1,300 and here 700. The statement saying the balance between those two accounts will be £600 difference, which is absolutely correct there. So if we see a 1,000 minus 300 give you 7,700, 1,000 plus 300 give you 1,300. So remember, guys, if we make an error on the opposite side, the balances are always the double the size of the error. So therefore, this statement is true. Now, next one, discount allowed of £57 was deducted from the individual customer account in the receivable ledger, but was not entered in the receivable control account. The receivable control account will be £57 higher than the receivable ledger. So let's say here, I will put £1,000 here, £1,000 here. So what they're saying here, when you give £57 on discount, this is how we should write it. But according to them, they have deducted from the individual account on the receivable ledger, but on the receivable ledger control account, it was not entered. So what is the balance here? £1,000. And this one is going to be £943. But let's look at the statement. It says here, receivable ledger control account is £57 higher than the receivable ledger, which is true. Can you see here? This receivable ledger control account, because of the credit note wasn't deducted for the discount allowed, it exhibits a higher number. So that statement is correct. Okay. Now let's look at the next scenario. A a debit balance brought down from the VAT control account means that an error has been made when posting transaction from daybooks. So think about the VAT account, guys. What does the VAT normally means? It is the VAT we collect from our sales minus any VAT we already paid when we done our purchases. Then you do the reconciling of any returns and discounts, and then finally we'll decide we'll have any money we owe to HMRC, or are we due for any refund from the HMRC? So this statement saying here, if you have a debit balance or debit brought down balance on VAT control account, there is an error. It is not 100% sure about that. That cannot be true. Why? Because you could have more purchase tax than your sales tax. Therefore, you could automatically qualify for a VAT refund. That VAT refund will show on your VAT control account as a debit balance. So that statement is wrong because it doesn't mean there's an error. It could be because you are due a VAT refund. Okay, so that statement is fundamentally wrong there. Now let's look at the next statement. It's saying here the purchase returns of £65 was recorded in the payable ledger control account, but omitted from the supplier account. So let's go back in here. Let's put £1,000. When I have a purchase return of £65, it goes on the debit side because it reduces the balance of my supply balances. So here, if I done that and we omitted from the individual supply balance, what is that going to give me? This one's going to be £1,000. This one's going to be 935. What is the statement here? The payable ledger control account will show £65 more than the payable ledger. So they're saying here, in payable ledger control account, it's showing a higher balance. They're saying the payable ledger control show £65 more. It is not. It is the payable ledger showing a higher balance. So therefore, that statement is also incorrect. Now, the next one. The sales return of £75 has been duplicated in the individual customer account, but has been recorded correctly in the receivable control account. So they're saying here, a sales return. So let's go back in here. I will go and amend this numbers. They're saying here the sales return of £75 has been duplicated in the individual customer account, but has been recorded correctly in the receivable ledger control account. So when you have a sales return of 75, we'll go here, 75, 75. So what they're saying now, on the individual customer account, it's been duplicated. So it's been done twice. So what is the balance here? 925 here. And this one is going to be 850. So in this scenario, according to my statement, receivable ledger control account should have a higher number. Can you notice that here? The balance of the receivable ledger control account is £75 higher, which is true because the control account we have entered it correctly, but the receivable ledger that's been duplicated. Therefore, it shows a lower balance there. So that statement is again true. Now, let's go back to the last statement. The last statement saying here, the total column of the discount received day book was £680, was posted to the wrong side of the payable ledger control account, but entered correctly in the payable ledger. So if I've done that correctly, they're saying here, one of them they have done incorrectly. So I know 680 is a huge number, but let's say for the argument's sake, leave that £1,000 there. They're giving a huge discount of £680. This is how I should have done it. But according to them, they're saying here on the ledger control account, it's in the wrong side. So here, this is why I have done it. But the funny part is they're saying after you done that error, it caused an imbalance of £680, which is wrong. Why? It is going to be the double of the error if you enter something on the wrong side. So here, 1,680, and this one is going to be 320. See that difference between those two numbers? It is the double the error. Double the error means it is on the wrong side there. It won't be 680. It's going to be £1,360. So if I'm going this minus that, it's going to be £1,360 is the value of the total error there. So that statement is incorrect. So if you get a question like that way, drawing up these accounts will be very beneficial for you when it comes to this ones for 6 months. But please remember, these questions, I will not do that until last because I will probably target any other questions earlier or later part of the exam where you have guaranteed chance of getting a huge number of marks before moving on to wordy questions like that way. Sometimes it's not easy to trying to manipulate your brain to think straight without putting the numbers where they actually belong. So if I'm trying to do that like a mental map there, you may not get it right. Okay, so just be careful with that. So the next question here also similar in this scenario. What we have, it has a question here. Identify whether the statements are true or false is about the control accounts. The balance on the payable ledger control account will identify the total amount owed by credit suppliers. Is that true? I'm going to look at it now. Is it by credit suppliers or to credit suppliers? See, all the statement seems to be all good, but they're saying the total number owed by the suppliers. They don't owe us, we owe them. So the statement should say, will identify the total amount owed to the credit suppliers, not by the credit suppliers. So that statement is wrong. Be careful with the way you're reading it. This is the key term here. The next one is the total column of the sales return day book will be posted to the credit side of the receivable ledger control account. How I'm going to prove it? If I'm going to look at that here, receivable ledger control is a debit account, which is the amount the customer owes us. So when you give a sales return to your customers, what will happen to that balance? It has to come down on the credit side. So therefore, the total from the sales return day book will actually, in fact, entered into the receivable ledger control account on the credit side. So that statement is true. Okay, good. Now, next question here now, they have given you all the day books information from different transactions. They're saying here, you extracted the following information from the system showing information related to the receivable ledger control account for the month of March. The total amount owed by the customer at the end of February was £42,823. So if I'm going to enter this in my books or in my control account, how would I enter all of that information? So the first thing is the opening balance. The balance brought down on the 1st of March is going to be 42,823. Why? That is the number we or expect from our customers. They're your assets, therefore it's going to be a debit entry. And then we go from this to the individual day books. So the first day book is invoice sent to the customers for goods sold, the total amount they owed, which is 27,744 VAT, and the net. Only the totals from these day books goes into the receivable ledger control account. So what is the receivable ledger control account we got there? It is the sales figure. The sales figure is going to be 27,744. Can you see here? By sneakily, they put the bank on the top there. Bank will be something we will discuss that later. Let's go through the day book one by one. And then the credit notes for refund for the damaged goods. So therefore, they're your sales returns. And you have discount we given to customers if they take a prompt payment discount is the discount allowed, and the bank receipts. What will do to their balance? It will reduce the balance there for the customers. So what we have here, all of that on the debit side, and that one will be on my credit side. So hold on, these are supposed to be credit sides. Remember, these will reduce the balances. So it's going to be 294 and 708. You can easily get led astray because if you put the sales and the sales return on the same side, it cannot be because they are the anti sales and anti sales. So think about it. If sales is one side, returns and the discount will be on the opposite side there. So it's good you remember that because the mistakes can happen as we go along the line. So let's quickly put this box now here and then find out they won't it get the balance carried on figure. So where you think the balance carried on will be? It will be on the smaller side. So if I'm going to look at that, debit side is the bigger number, the credit side is a smaller number. So the balance carried on will be equal to the sum of these two minus the sum of these three, which will give you 41,119 pounds there on the credit side. And this will obviously will become a debit balance on the 1st of April when we start in the next period. Okay, so that is a really good question when it comes to the ledger control account. And then they're giving you the VAT control account now. So let's quickly draw up a T account for the VAT control account. So here, let me name it VAT control account. So they're saying here, you have extracted the following information from the accounting records. Complete the VAT control account by placing the entries on the debit or credit side. Clearly show the balance carried down at the end of the month. So if I'm going to say here, the balance owing to HMRC on the 1st of March, it is owing to, therefore, what is that going to be showing me? Now, 8,054 pounds. That will be on the credit side. So I'm going to say balance go down, 8,000. 8,054 pounds. And then we have to go identify what are the entry scores on each side of it. So be careful, guys. If you get one of them wrong, it's a potential you get everything wrong there. So be careful which one you're going to first. I'm going to start with the sales. If I'm going to look at the credit sales, that sales, when we collect VAT from my customers on my sales, I owe it back to HMRC. So therefore, what I'm going to do, I'm going to say sales day book here. Okay. So it's going to be sales. I'm just going to say sales here. If I put the sales there, 17,800, where's your purchase is going to be? Purchase is going to be here. How much is the purchases? Is going to be 8,056. Okay. So if I have my sales here, where's my sales return? Sales return is going to be the opposite side. Sales return is going to be 216. So if I have my purchase here, where's the purchase return? Purchase return. This is going to be on the opposite side. So purchase return is going to be 464 pounds. If I have my sales here, my discount allowed. So this is going to be 79 pounds and discount received will be on the opposite side. Where are you? Discount received, yeah, 160. And then also now let's look at the cash purchases and cash sales. If I have sales here, cash sales also will be on the same side, which is 312, and cash purchase will be same side as your purchase. It is going to be for 304 pounds. And then also we have the payment made to HMRC. So bank will be an entry 8,054. What is the meaning of it? We have paid out of the bank, credit your bank account, debit your VAT control account. Now let's do a quick total. Obviously, you know, credit side is going to be larger than the debit side. So let's say here equal to sum of that number is 26,790 pounds. So what we will do here, we will find the balance carried down on this side. Okay. So balance carried down will be on the debit side, will be equal to that minus that figure minus a range. I have to get rid of all of that. Oops. It should not be like that way. So it will be that minus sum of all of that. Yeah, 10,081 pounds now. So let's say here, this one is going to be sum of equal to sum of all that number. So there we go. Both numbers are now matching. So what you can see here, if I have to clearly show the balance carried down, you must make sure add all of that and take away all your debit entries, and you'll get the balance carried down figure. And then you don't have to show the total. As far as I know, in the answers they don't ask you the total, but you clearly need to show the balance carried on figure. Okay, so that is a really good question when they incorporate both the control accounts and the VAT control account there. Now, we have a bank reconciliation statement to do. We will do that in a second. We have a couple of them. Let's look at this payee question beforehand, before we go into the bank reconciliation. So here, a business has prepared a payroll information as follows. They're giving you gross pay to the employees, income tax, uh, employees' national insurance contributions, employers' national insurance contributions. So they're asking from this one, what are the numbers to go into these debits and credit columns? But what you need to remember is the key, which is the nominal codes they have shown here. One of them is wages expense. What is the wages expense? It is the amount it costs for the business to employ you. That is not purely your gross pay. Gross pay is just what they're paying you. And then also they have to pay something on top of it, which is the employer's national insurance contribution. So let's say here, if I'm going to put them into a journal, so I'll say debit and credit. Nice, if I got the right spelling, yeah, that's it. And it's your nominal code. So the first nominal code is GL 700. What is my wages expense for me? Because this is going to be a debit entry. Why? Expense is a debit entry. Plus 3675 employer's contribution. The total cost to employ you is 36,350 pounds. And the next code is GL 210, which is the liability we have to pay towards payee. Payee means your pay as you earn income tax. Your income tax in this scenario is 6,130. The next number is GL211, which is your national insurance liability. How much is your total national insurance you pay to HMRC? You're going to be paying the employees' national insurance contribution plus the employer's national insurance contribution. So those two are going to be 3,031 plus 3,675 pounds. Okay, altogether 6,706 pounds. And the last one is your net wages liability, which they owe to you, because normally they keep that as a liability unless they pay that to you. Once they're paid, it goes out of the bank account as a credit. But at the moment, it kept on your books as a liability until the payday. And how much is the money they owe you? If you look at that here, your gross pay, which is your salary there, minus any of your contribution. In this scenario, is your income tax minus your national insurance contribution. If you pay those two from your wages, you should get 23,514 pounds net wages paid to employees on that scenario. But let's prove it whether these numbers are correct. If I add all three, it should get that same number as your total wages expense. So let's do a formula here. Can you notice that number automatically comes up there as the matching journal entry? So if I'm going to do a journal entry, if I have one debit there are three credits, which all these three credits will be equal to that one debit entry there. It proves my total wages expense now accounted for by splitting into these three entities. Sometimes we use something called a wages control account to distribute these funds, but sometimes you will have a journal entry like this way, where you don't use the wages control, you straight away split this wages expense among with these three liabilities together. Okay, so keep an eye out for the different types of question when it arises from the wages account. Then this is another question you see in the exam, which is the trial balance, redrafting the trial balance questions. So when you get this question, some students do get kind of a straight, because they look at these numbers and they think nothing of it and they completely forget these will be automatically clearing the suspense account balance. Can you see here the suspense account balance of 7,740, which is on the debit side? And if you look at these two entries, will automatically clear the suspense account balance. So because these two credit entries into the suspense account will clear the suspense account. So there will be no further action needed on the suspense account. All you need to do is update the individual other ledgers there. So these individual ledger entries, whatever needs to be updated, it will be updated, and then you will get a new total there. So let's say here, first one, drawing is a 5,000 pounds debit entry. Can you see your drawings account here? Since there is no drawings there, they have created the drawings account, and then we'll put 5,000 pounds in there because that is the missing entry from the drawings. And the next one is payable ledger control account has 2,740 on the debit side. So if I'm going to look at that here, payable ledger has already 26,670 there. So what is the number when I put something on the debit side of it? 26,670 minus the debit side entry, which will reduce that balance with an updated amount of 23,930 pounds there. Okay, this will reduce the credit amount of your payable ledger control account. And now let's fill out the next information. 134 is simply putting the rest of the information as it is. 113,925. The bank is 16,076. 25,370. 33,393. And the capital is 15,700. Now let's do a total here is 163,764 pounds. Will that get the same number again? Exactly. If I have look at that here, 193,764 pounds on both debits and credit side. My trial balance now matching. Initially had that number, but now it's been redrafted to that number there because the suspense account now is no longer active. It's been removed and it's been automatically repurposed our trial balance with new numbers for both of these two accounts there. And therefore, trial balance again was redrafted and we have a new balance. Okay. Now let's look at the bank reconciliation questions here. So we have two bank reconciliation questions now. So what they will do, they ask you to fill out. So just bear with us. Let me find out another file I used earlier. POBC. I don't know where I kept it. It's not there. Okay, let's redo it again. Anyway, so let's find out where was the original question is, how that paper looked like. There you go. Closing balance brought down, closing balance. So here, cash book, debit, debit. So this is how the bank reconciliation statement will look like. Let me just do this. The wrong option. Okay, here you go. 1 and 2. Right, now let's look at the first one. We have to match everything. We need to see that first. Okay, so let's look at the draw option to highlight what are the things we're going to match. So first thing is the opening balance. Can you see that opening balance here? £267 against the bank statement balance 1,743. They're both not matching. So there is a discrepancy with the opening balance. It's possibly down to a timing difference from the previous month. So let's see here. Anything catches our eyes when it comes to those two numbers. What is the difference between them? 1,743 minus 267. It gives you £1,476. Can I see something matching that exact number? Can you see here? There is that number there, 1,476, that check number there. So what I'm going to do with that check, I need to make sure I add that or take away from this number here, and that will eventually give me that balance. So what is the meaning of that check? You see that check number? That is an old check compared to the newer check numbers. Can you see these numbers are here? The LASEC Limited, and then this check for 4,632. They're being issued this month. They have a latest number comparatively to this old check, which is 11557. Therefore, this is something from the previous period. Because that is from the previous period, they are only cleared now. It's already been entered in the cash book on the last month. I don't need to do no adjustment to it. All I need to do, match them and use that as my part of my reconciliation. Now let's go through it. We have 474, 474. 4,632, 4,632. But we have a couple of other things there which you not matched. Here you go. The one of them is this one, it's not matched. And then also this £75, it's not matched. Okay. So these two has to be updated in a couple of my records there. Now let's go back in here and check anything from the debit side. So 2768 is there, 2768 is there, 2529 is there, 2529 is there, and 2015 is there, and 2015 is here. And then we have two more entries here, this Baker and Co. and this Minsky product, they're both missing from either this or that. So what we're going to do now, we need to make sure we update our cash book with it. So here, the balance brought down for that cash book is going to be 2,450 on the debit side because this is the balance carried down and that will be the balance brought down. So it will be back on the debit side now. What are the things I need to update my cash book with? Can I update the cash book with anything on my cash book? No, only the ones from the bank statement because they're in the bank statement and they're not in my cash book means cash book needs to be updated. So let's say here, the first one is Minsky products. How much is that for? 1,596. What is that going to do to my cash book? It's going to increase the cash book balance because eventually the money is received into the bank account. It shows a higher value on your cash book. What is the next thing you see there, guys? The next amount is £75 bank charges. Bank charges, and it's £75 here. And then there is no further updates there. That means these two are now updated. So those two numbers can change to yellow now because they're both updated. Now the next entry is we have to find the balance carried on figure. So how I'm going to find it? This plus this minus that figure. It is £3,971. Let's see my bank statement returns that number again. So let's say here, what is the number? 3994. This is my bank statement balance. 3994. So I have to put it here. 3994. And then they're saying here there are two entries. One of them is an outstanding lodgement and one of them is an unpresented check. Outstanding lodgements, you normally add to my bank reconciliation statement. Why? When they go into my bank, they eventually increase the bank statement balance. So here, this Baker and Co., I have given the bank the amount we have paid in there, but it's not cleared yet. So we're going to say Baker and Co. That's going to be added 1740. And then here on the Barbie Limited, Barbie PLC, 1763. So we're going to take that number away. So the final number will be this, add that number minus the number which give you 3971. So in this scenario, it matches with my bank statement to your cash book now. So this is the updated bank statement balance. So I should say cash book balance here, but it will be eventually your new bank statement balance, but that will match with your cash book. Therefore, you successfully reconcile your cash book and your bank statement. So let's go back in there and do that same again here. I'm going to do with the same scenario. Okay, so let's look at these two numbers now. I have an opening balance of 1,456 for the cash book here, which is an overdraft, and then also overdraft of £689. So there is a difference of 1,456 minus 689, which is £767. Luckily, I found the check straight away here. So when I'm going to look at that here, it's pro. That number reconciles with both that number and that number. Therefore, can you see here? We have achieved that 1,456 on the first go. So that balance automatically counted towards these two entries there. So that is automatically sorted. Now let's look at the credit side. So here, Mentor PLC, I can't see that number. Greenway, yes, I can see that 6,021, £616, £616. Okay, I found those two, and these two are missing. So as there is one here, we'll mark them a bit later on. Now let's look at the debit side. Go 39785. We have got that one. Clark. Here we have Clark as well, and then we have a counter credit of 2,529 and house B traders of 1,740. Both of them are missing. So as this backs credit of B Cobden, that is also missing there. So what we're going to do, we're going to say these ones are your timing differences. These are not there. So is these two, which I'm going to update my cash book with. So let's update the cash book. What is the closing balance board down? It is 204. That side means the closing balance board down will be 2004 on the credit side. And what are the two entries I'm going to update my cash book with? One of them is a standing order. Another one is a backs credit. So those things happen without our knowledge. When we receive the bank statement, we found them now, we update the cash book with. So let's say here, park property, property, okay. And how much is that for? £500. And then we have the Hobden. And how much is that for? 768. So the balance carried on, it's going to be on the credit side now. How much is that going to be equal to? That minus that and that, because definitely it's going to be a debit balance now. Once it's gone there, it will give you an updated balance on the debit side. So let's see that here. No, it says the balance carried down will be on the credit side. Obviously, will be automatically balanced board down on the debit side. Now, once you've done this, you probably would have noticed now from overdraft, now my account is showing some life. I have some money there now. So let's look at that bank reconciliation statement. We start with £5,558, which is we have money, and then we add any outstanding lodgements. There are the two outstanding lodgements here. One of them is a counter credit. So I'm saying counter credit. It's for 2,529. And then we have house B traders, which is 1,740. And then we're going to take away any unpresented checks. Here is going to be Mentor PLC, which is 1,763. And she, which is £8,000. Now, can you see here, what is the new number will be for this one? So in this scenario, this is going to be equal to that plus that plus this minus this minus this. Will I get £64? Fingers crossed. £64 now. Can you notice everything we follow according to what we know, the step-by-step method, we will not go wrong. We need to make sure we use the highlighting tool on your AAT website. When you're going to do that, it's on the top part of your exam screen under tools. There is something called a highlighter, which allows you to have the bank reconciliation highlighted. So when you're going to do that on the other side, you can split the screen into two via the reference section, and you'll be able to highlight the numbers, and then you'll be able to fill out the missing information on the both cash book and also the bank reconciliation statement. So this way, you'll be able to counter any kind of a curveball thrown towards you, so you know how to hit that for a home run. You're going to not miss it if you follow everything step by step. You're not going to be out of sync there. Just keep an eye out for, make sure the opening balances are automatically reconciled. Then you look in the matching of the debits and credits, check for anything missing there, and those will be either your timing differences, or in this scenario for these two transactions from the bank statement, you have to update my cash book with. So once you updated your cash book, those entries will eventually will give you an updated cash book balance. Okay, and then the same cash book balance can be matched when we're doing the bank reconciliation statement. It will show you a plus £64. If there is an overdraft, like here, £204, this will be showing a negative number there. So luckily, it is not. Therefore, will be absolutely fine. Make sure only the negative number can be shown in these two boxes only. You don't show the negative number anywhere else. It's only these two whether you can do negative, because here it says less. You doesn't use the minus sign here. If you use minus sign